Financial Focus. Steve Budin is here. Steve, good to see you.
You too.
Let's get straight to our first item here, and producer prices dropping. What does that mean?
Yeah, this is really no surprise. Every month, the producer index comes out saying how much does it cost to produce goods in the United States. With the oil price drop so severe in the month of January, it's no surprise that producer rates really dropped. It was actually the largest drop since they've been keeping records. So it's pretty significant. And I bring this up, it's because it's one of the data points the Federal Reserve looks at to track inflation. Depending on how the inflation report looks, that will indicate whether the Federal Reserve will decide to raise rates at some point during this year.
And of course, gas prices have started to climb
Yeah.
in the past week or so.
Yep.
Is that going to affect what we see next month?
Right, and I think a big part of the report that producers use to make their goods is obviously energy. So I think in February, we won't see as drastic of a drop, and we may even see an increase. That's why I always say these month-to-month reports are pretty tenuous, and the Federal Reserve knows that, and I just got some information recently that said the Fed last month in their minute meeting said that they're going to be patient. So just because a lot of these one-offs happen, home construction included, they're not going to be in any rush to raise rates, which is actually pretty good news.
So we'll have to wait and see.
Yep.
The next item on the agenda is home construction down, but I have a note here saying it's a good thing.
That's right. Home construction, we talked about this in January, had a great month, but I did say can't rely on 1 month. Now the second month in a row, good report, not great, so it's not as bad as it sounds. Homes are still being built at the rate of about 1 million per year, which is good because folks who are living together are now forming their own households, which is good. Again, good economic data for the Fed to look at. Now, if you couple that with the producer prices going down a little bit, the cost of building the homes may not be going up as much either, which could be good for home prices.
And if you are looking to buy a home, the mortgage rates
Yep.
are actually starting to go back up. They were
Right.
very low.
Yeah, and I sent this report in a couple of hours ago. Now it may be different with the Fed deciding not to raise rates anytime soon. So I wouldn't be surprised if you see mortgage rates drop back down. What happens is the interest rate market, the bond market, tries to predict forward what's going to happen. The last couple of weeks, they've been guessing that the Fed was going to raise rates sooner rather than later, but the minutes that we just saw is saying the opposite. So don't be surprised if you see mortgage rates begin to tick back down again. So that was actually a little bit of an outdated report.
Oh, so we're kind of seeing a little bit of a roller coaster
Right.
with these predictions.
Right.
So maybe wait if you're trying
Right.
to refinance.
As I've said, making predictions is extremely difficult, especially with the financial markets. So rates went up. They're still pretty good. They're still sitting at around 4%, but refi activity has really dropped because the last 6 months you could buy a home and really get some good interest rates, right?
Yeah.
But I wouldn't be surprised if you see in the next couple of months for those rates to tick back down again, except the Fed, again, may change its opinion as it sees more data points come in. But everything we've seen this week is showing that slow but steady growth, but no inflation to speak of. Overall,
a pretty good Financial Focus report.
Pretty good.
Yeah,
No
things
complaints.
looking good.
Yep.
Steve, good to see you.
Sure.
Spencer.
Always